A very good afternoon. You're watching Countdown. I'm Abha Bakaya. We're going to track, of course, the end to this wheel. Of course, waiting for you here in the studio. But in the meantime, let me also welcome Brandon Wendell, who's joining us as well in studio today. Brandon, a very good afternoon. Thanks for being with us.
Thank you very much.
Markets at this point starting to slip in trade. Even yesterday we saw weakness setting in after the initial half of the week where they were continuing to sort of soar ahead, not leaving any doubt about which direction they were going in. But what do you think? Are we just consolidating? Are we seeing cautiousness? Or you feel this is it? This is what we're going to see now for some time?
Well, this is our first retest of those large highs that we had back in 2008 in the markets, and being the first retest of that supply level could indicate a possible pullback in the markets. Seeing this sideways consolidation, the candles themselves going to on a technical basis are showing a bit of selling pressure even as we are reaching these highs. So I'm anticipating a bit of a pullback in the markets, especially looking forward, as you guys were saying. How much of a pullback? Yeah. You want to pin me to a number, don't you? I have to take a look at the charts offhand. I haven't been able to.
Perhaps in terms of percentage?
As far as percentage, I mean, I could see us pull back even as far deep into the 5,700 level on the Nifty if it gets really bad. I don't see it being that bad. We do have the support coming up around, I believe, 60.55 that we're possibly getting ready to test today.
Right, so what's a smart thing to do then at this point of time? Where should one be betting one's money?
Well, for the most part, we have a kind of a sector rotation that goes on throughout all markets. And if we're going into an area of uncertainty in the markets globally, then really what you want to do is play a lot more defensive. We're going to be looking towards pharmaceuticals, want to get away from materials, away from the automakers, and into defensive, service-oriented companies.
Any particular stocks there that you're looking at?
I don't have any particular stocks I'm looking at this moment. I will be doing a little bit more research with that, but I do talk about those in my classes.
What about the FMCG pack? Because we did see a bit of renewed interest coming in that defensive play as well, but they seem to have slowed down already.
Well, again, it's one of those things where right now the FMCG has slowed down because people are waiting to see, is this a pause before a continuation of the previous rally? For the most part, if we start to break down through this nifty support level around 60.55, you'll see the FMCG pick up quite a bit.
All right, so talking about where not to be, you mentioned auto, and the other space as well, and when you're talking about materials, is the metals pack. It's been fluctuating wildly, and it's not really participated as such if you look at overall over the last couple of months. In particular today, like a counter like a Tata Steel, or even yesterday, for instance, the biggest loser on the index. What would you advise there on the metals front?
Well, as far as the metals front, usually the materials are preceding energy towards a market peak. So when we saw those doing well, that was signaling a bullish market. But now that we're seeing a little bit of weakness in that particular sector, I would suggest that, again, you see more play on the short side on those, such as Tata Steel or any of the materials, as well as even some of the energy plays. I would look more towards pharmaceuticals, as I mentioned before, some of the drug companies, maybe DR Reddy, a couple other companies such as that.
All right, so Dr. Reddy's today, let's bring that up.
Okay, that's a whole host of nifty opinion coming your way. Brendan, what about the S&P 500 itself? Lots of people are tracking that very closely to see if it actually hits 1200 to take some sort of direction for the Nifty because of the kind of inflows that we're getting from the global markets. Does it look like the S&P might hit 1200 anytime soon? Well,
I see right now, looking at the overall support and resistance picture, the markets tend to take the path of least resistance. And right now, there's a lot less resistance for it to go down than there is for it to go up. It's going to be a tight grind. One of the main issues is going to be the non-farm payroll numbers as they come out today to see what's going to be happening there.
But would you trade it long or short at this point?
I'm actually on the short side.
On the S&P?
On the S&P 500.
What kind of targets are you working with?
Sorry?
What kind of targets are you working with?
I'm actually looking at some longer-term targets very much to the downside. I'm looking for us to break the 1100 level, to be honest with you, and to retest maybe 1088, 1040 area.
Recently, there's been a lot of talk about inflation in India. A lot of it has to do with the fact that crude itself has gone up by about 10% in the last, fortnight or so. When you look at something like crude, do you think it's good for more on the way up? Is it good for a long trade maybe?
It's kind of an iffy one, actually, because what I'm looking at when I'm looking at crude is not just crude itself, but also looking at the U.S. dollar index. And the dollar index is down to about 77 and change right now. So it's been moving down very dramatically, but we are rapidly approaching a support level. So I'm going to be watching that support level, and I forget off the top of my head the exact level area, but I'd be watching to see if the dollar starts to find a little support. That's going to start sending the oil prices back to the downside.
Talking about crude, you didn't sound too hot on the oil and gas space either.
No, not so much.
We had a lot of sell calls coming in the oil marketing companies. Would you also be advising a sell over there at this point?
I most likely would, yes, just because of the overall rotation.
Okay.
Okay, let's take a quick break on that note. Lots more to talk about with Brandon when we come back on the other side. Stay tuned. hopefully. But while we're waiting for that, Brandon, do you want to take a quick call in on Reliance Industries and how that's Orient Paper? I'll just come back to that. That's Orient Green Power, 5%. Can we just show the other two as well quickly? That is Ramkey as well as. Okay, we'll come to that. You want to take a shot at Reliance Industries?
Sure, might as well take a look at that.
Sure.
Looking at Reliance Industries. Anyway, looking at Reliance Industries, we've had a little bit of a rally in the past couple of days going to the upside there, but it's been kind of a weak move to the upside, and overall I've been seeing some downside potential on that as well. So.
All right. So Reliance there is, as Brandon's view on Reliance, 1,044 is where it's trading at right now. How would you really advise an investor to play this market at this point of time, Brandon? I mean, apart from which sectors to look at, should they be looking at mid caps, going for the heavyweights? And for someone who hasn't actually invested yet, would you even advise getting in at this point?
Well, as far as looking at the long term right now, no, I would not advise someone to jump in at these levels. Obviously, the markets have been very, very choppy. We're in a period of time where we're in consolidation. We could break out to the upside and continue the trend, depending on global trends as well as local. But for the most part, it's better to wait for that breakout rather than try to time whether or not it's going to be going to the upside or to the downside. So if you have money on the sidelines, I would wait to get in. If you're already involved in the markets, one of the main things I would look at is tightening the stops and looking to see, obviously I'm slightly on the bearish side as far as my predictions and where I'm leaning towards the markets right now, but it doesn't say that it's not going to break to the upside on the Indian markets, even globally. But as far as when you go into these choppy periods where things are not sure, you're not positive it's an upward trend, not positive it's a downward trend, it's better to shorten your time frames on your holdings or make sure that your stops are very, very close.
I have a very similar question to what Abha asked you right now, and I want to come back to Reliance. Would you advise someone to come into Reliance now? You were telling me just a couple of minutes back it's been a very weak stock. It has. So if money had to be made on Reliance, is it probably more on the short side? Would that be the bias?
Actually, one of our classes we took a long. I just recently came back to India. I had gone back for a small vacation to the States, but before we did, we put in a long position on Reliance, which obviously has paid off for us. But we've hit our targets, our price targets. So now I'm looking at it as coming up to this area of resistance. We may continue the overall downward trend, especially if the overall market starts to show a little bit of weakness.
What's looking good to you at this point in time?
I have to take a look. Honestly, like I said, I literally got off a plane
even sectorally,
last night.
that's fine. I mean, even if you don't want to get into individual stocks, sectorally, what's
sectorally, again, FMCG, looking at the more protective pharmaceuticals, service companies. Those would be the ones I'd be looking to go for the long side. To be honest with you, I love playing the short side of the market, so I have no qualms about looking at some of these companies that are overvalued and trying to play them short.
What about some of the smaller construction counters or even financials and brokerages? How would you view either of those?
I would look at both of those to the downside, to be honest with you. Construction companies, infrastructure, typically if you're going to be seeing slowdown, especially with the increase in the interest rates, if inflation continues to be a problem here in India, as you were alluding to earlier, you're going to be seeing costs going up and therefore a slowdown in the expansion in construction. So that would be a sector that I would stay away from on the long side. Financials, for the same reasons, interest rates going up, they're going to be taking a little bit of a hit as well, and even the brokerages.
You said there's not much money to be made on the upside. A lot of fundamental analysts are actually hoping that banks will bail the earnings season out this time around, and a lot of them are still advising buy. In fact, a lot of global brokerages, JP Morgan's actually doubled its price target on at least 2 or 3 public sector banks here. So you think something like an ICICI Bank or a State Bank of India gives you good shorting opportunities at these levels? Say maybe 15-20% kind of downside?
I wouldn't necessarily say it's going to be a good shorting opportunity. I'd just say that they wouldn't necessarily be in favor. I would definitely look more towards the construction, look more towards basic materials for a shorting opportunity, not necessarily financials. Financials are going to go down with the rest of the market if the market does happen to go to the downside, but they may not give you the same kind of shorting opportunity as some of the other more overvalued companies would be. So I'm not trying to backtrack. I'm just saying that you misinterpreted what I was saying. I am more bearish on that sector, but I'm definitely not looking at the short side on that sector.
Okay, we'll leave it at that for this afternoon. Appreciate your company, Brandon. Thanks so much for taking time out. We're in some sort of recovery mode. We're back to 60.85 on the Nifty.